AI stocks, a roller coaster ride. The AI stock market is in turmoil, and it's not just a blip. On Thursday, the S&P 500 took a hit, with a 0.5% decline, and the Nasdaq Composite followed suit, shedding 0.7%. The Dow Jones Industrial Average wasn't spared either, dropping 0.6%. But here's where it gets controversial. The market's reaction to AI stocks is a mixed bag, and it's all connected to the labor market and those eye-popping valuations. The labor market is a key player in this story. October saw a surge in layoff announcements, with a whopping 153,074 jobs cut, a 183% increase from September, and a 175% jump from the previous year. That's the highest number of layoffs for an October in over 2 decades. And it's not just a one-month blip. 2025 is shaping up to be the worst year for layoffs since 2009. Wall Street was keeping a close eye on AI stocks during the session. Qualcomm, despite posting better-than-expected quarterly results, still saw a 2% dip. Advanced Micro Devices, a star performer the day before, fell 5%, while Palantir Technologies and Oracle dipped 2% and 3% respectively. Even AI favorites like Nvidia and Meta Platforms took a hit. But there were some winners too. Marvell Technology shares rose over 1% on takeover rumors, with Softbank reportedly considering a potential acquisition. Equities linked to AI had started to rebound on Wednesday, offering a potential boost to the major indexes. AMD's better-than-expected third-quarter results lifted the market, with shares closing over 2% higher in the previous session. This positive performance had a ripple effect, pulling up other AI stocks like Broadcom and Micron Technology, which jumped 2% and 9% respectively. Oracle also recovered some of its recent losses. The AI stock's recovery helped the market bounce back on Wednesday after a weak start to the week. Cheryl Penny, from Dynasty Financial Partners, emphasized that we're still in the early stages of the AI supercycle, with significant investment expected from major players like the Mag 7 and financial giants like Schwab and JP Morgan. Investors were also keeping an eye on Washington, as the Supreme Court considered the legality of Trump administration tariffs. There's growing expectation that the court will rule against the aggressive trade policy, with justices expressing skepticism about the tariffs' legality. A potential ruling against the tariffs could send stocks soaring. Duolingo's guidance woes. Duolingo stock took a nosedive, falling 27% due to lighter-than-expected guidance. The language learning platform is prioritizing user growth over near-term monetization. CEO Louis van Aan explained the shift in investment strategy, focusing on long-term opportunities. For the current quarter, Duolingo expects bookings between $329.5 million and $335.5 million, falling short of estimates. Adjusted EBITDA is forecasted to be between $75.4 million and $78.8 million, also below expectations. Market open. Stocks down. Stocks opened lower on Thursday morning. The Nasdaq Composite dropped 0.3%. The S&P 500 fell 0.1%, and the Dow Jones Industrial Average traded flat. Pre-market movers, Qualcomm shares slipped 1% on news that they may lose Apple as a customer for their modem business. This overshadowed their strong fiscal fourth-quarter earnings and revenue beat, as well as a positive forecast for the current quarter. Warner Bros. Discovery shares fell 1% after reporting a third-quarter loss of 6 cents per share on adjusted figures, with revenues of $9.05 billion. Analysts had expected a loss of 4 cents per share on revenues of $9.15 billion. Qualcomm's earnings beat, but Qualcomm delivered strong fiscal fourth-quarter earnings and revenue, exceeding estimates. However, some analysts were concerned about the potential loss of Apple as a customer, overshadowing the positive results. Despite the strong performance, Qualcomm shares traded 1% lower on Thursday morning. Softbank's interest in Marvell. Marvell Technology shares surged 8% in pre-market trading on Thursday, after reports that Softbank had considered a potential takeover earlier this year. The idea was to combine Marvell with Arm Holdings, a UK-based semiconductor company. Although there are no active negotiations at the moment, there's a possibility that interest could be revived. October's layoff surge. October saw a significant increase in layoff announcements, with a total of 153,074 jobs cut, the highest for any October since 2003. This is a sign of potential trouble ahead for the labor market, as companies adjust staffing levels during the AI boom. Forge Global Schwab acquisition. Forge Global, the private company share exchange, soared 64% after announcing its acquisition by Charles Schwab for $45 per share in cash. The deal values Forge at around $660 million and is expected to close in the first half of 2026. Schwab CEO Rick Wurster highlighted the benefits of the acquisition, emphasizing improved liquidity, transparency, and access to wealth creation for investors. e.l.f. Beauty's tumble. Shares of e.l.f. Beauty tumbled 24% after the company issued weaker than expected fiscal year earnings guidance. The company's earnings per share outlook for fiscal 2026 is between $2.80 and $2.85, below analyst expectations of around $3.53 per share. Time to diversify. Torsten Slok's advice. Torsten Slok, Apollo Global Management's chief economist, advises investors to trim their exposure to the Magnificent Seven stocks and diversify their portfolios. He emphasizes the importance of a balanced approach, just like a healthy diet. After-hours trading. Snap's buyback program. Snap stock surged 26% after hours on Wednesday, as the company unveiled a $500 million buyback program and issued strong fourth-quarter revenue guidance. Additionally, Snap announced that Perplexity AI will pay them $400 million to integrate AI search capabilities into Snapchat. Arm Holdings stock rose nearly 3% after beating expectations on both the top and bottom lines. Figma, an AI software company, saw its shares rise nearly 6% after beating third-quarter revenue estimates and raising its forecast for the year. Lyft stock climbed nearly 3% following an earnings beat, with the company earning 11 cents per share, exceeding analyst expectations of 8 cents per share. Stock futures. Little movement.